Hello, welcome to Strictly Money at the News Forum, where all voices matter. I'm your host, Saijal Patel. The Bank of Canada hiked interest rates by a full percentage point, the largest increase since 1998, in a bid to squash stubbornly high inflation. It was a surprise to many, and together with red-hot inflation figures coming out of the U.S., triggering even more nervousness in the markets. Join me now with her thoughts on the economy and how to position your portfolio in these uncertain times is Lesley Marks. She's Chief Investment Officer of Equities at Mackenzie Investments. Hi, Lesley. Great to have you on.
Hi, Saijal. Nice to see you again.
So, Lesley, a hefty 100 basis point rate hike, a surprise to many. Were you surprised? And do you think that this hike will make the impact that they wanted to make, and that is cool demand? Because it's certainly not having the impact in the U.S. if you look at the latest inflation figures.
Well, yes, to answer the first question, we were absolutely surprised by the 100 basis point hike. We were looking for 75 basis points. To answer the second question on impact, I think it's premature to see impact in some of the areas that central bankers are particularly focused on. Obviously, most notable CPI. We saw a very high print yesterday in the US, ironically on the same day that the Bank of Canada came out aggressively. That's probably shifted the Fed towards 100 basis points in thinking in their next meeting as well. But some of the leading indicators are really starting to show impact. And there's a lot of signals as well in the market. We've seen it in the commodity complex. A lot of commodity prices have come off pretty substantially from their peaks or their current year peaks. So we're starting to see the impact from an expectations perspective. We've seen inversion in the yield curves also starting to show that these interest rate increases are likely to lead to a slowdown or potentially recession towards the this year.
Yeah, and I was going to ask you, is that what they have to do? I mean, they're not going to publicly say it, but do they have to engineer a recession to cool this demand off?
Well, it's certainly not the intention. If you go to the press conference from yesterday from the Bank of Canada, they talked about explicitly targeting a soft landing. So is it possible that the unintended consequence is a recession? Yes, and probably likely. But right now, the goal, the stated goal would be a soft landing. Now, you know that the central bankers have to focus on can only focus on the demand side and not the supply side. So I think what we heard yesterday with the surprise move is that they are going quickly and aggressively at targeting demand. And that was certainly in the messaging.
Lesley, the markets are, it seems they are certainly pricing in a recession. How much downside do you see in Canada and the U.S.? I mean, Canada obviously has the commodity play in its favor for now, but you just said that you're starting to see some cracks there.
So I think it's hard to say exactly how much is priced in. What we have seen so far is merely multiple contraction. The S&P TSX is trading at 11 times this year's earnings, and we think those earnings are pretty good. There might be a little bit of downside throughout sort of the second half of this year, but because most of the earnings momentum is coming from energy revisions upwards, and energy is still significantly higher on an average price basis this year versus last year, we think the earnings outlook is pretty safe for Canada. So the next shoe to drop, though, is the perception that earnings need to come down. And I think we're going to see that more in U.S. earnings. Canada, I think that will be more of a 2023 story.
Okay. Lesley, we only have about a minute before the commercial break. What sectors are you looking at specifically that show some, decent valuation? And maybe the other question is, how are you gauging it? Like, what are things that you specifically look at?
Well, I think the important thing here is to have a perspective, a long-term perspective. And what we're seeing right now is an acceleration in a negative outlook for both the consumer and for businesses because of how aggressive central bankers are being are tightening financial conditions. So when you look across sectors, probably the safest place to be are sectors that are the least economically sensitive, because that's what's really coming into the focus and coming into the shorter term horizon. And that was certainly not our outlook at the start of this year, but it is becoming increasingly apparent that global economic growth is going to slow in a significant way.
Okay. Welcome back. Lesley, before the break, you were talking about looking at the least economically sensitive stocks, probably the defensives. So continue. What are you seeing there, and where are you seeing the opportunities?
Yeah, so I mean, I think the sort of the safest place to be right now when you're going through a recalibration of economic growth is in defensive sectors like healthcare, like telecom, like consumer staples. Now, many of these sectors are priced reflecting that, and they're at premium prices. So you have to be, as usual, picky around the stocks that you look at within the sector. So I'm generalizing on the defensive sectors. I think where you don't want to be, as I said, are on things that are very much levered to an economic recovery, at least not right now. There will be a time for that. And we are going through a traditional, old-fashioned business cycle here, engineered by the central bankers removing excess liquidity, which is causing demand to be over capacity right now in the market. So there will be a brighter day in our future, but right now we have to work through this excessive demand period.
And Leslie, I guess for defensives, I mean, the reason we talk about that is these are products that you need no matter what, right? And whether the economy is down or not. Are you seeing signs that most of them are able to pass on higher costs, or is it still sort of a stock picker's game?
Mm-hmm. Mm-hmm. Well, I think that's a very good point to focus on, Saijal, because when you think about it, we have seen many companies have pricing power. But as the consumer starts to lose faith or confidence, which we're definitely seeing in the leading indicators, the ability for businesses and producers to pass on higher prices is going to be much more difficult. Mm-hmm. And so, those companies are going to be few and far between. And so the next place that one needs to focus on as an investor is where companies end up, having that unique pricing power, regardless of consumer sentiment, and as you mentioned, in places where they're necessary goods like consumer staples, but also where companies have very strong free cash flow that they can use to support their stock, either buying their stock back or paying dividends. So there's many companies around the world globally that are in that fortunate position here where they will really stand out and be highly desirable for investors in a more challenging environment.
Okay. Lesley, speaking of global, I want to talk about China for a minute because it is the second largest economy. So things that happen there do actually have an impact here as well. What are you seeing there in terms of both headwinds and maybe opportunities that we should be aware of?
Well, China is a major focus, certainly for us in our latest mid-year outlook report. It was one of our three key themes, including central banks, inflation, and of course, China. And the reason, as you mentioned, is because of the role that it plays in the outlook for a global economic growth. When we started the year, we thought that China could be a bit of a contrarian play because we expected to see Chinese policy be a lot more accommodative, both on the monetary and fiscal side, and that was going to be very unique in the global landscape. What has transpired since then and made things a little more challenging for China has been this focus or commitment on the dynamic zero COVID policy. And that has resulted in policy leading to lockdowns in significant areas of the population in centers like Shanghai and Beijing, which has had a strong impact on the outlook for economic growth in China and frankly, as you said, intertwined with the rest of the world. So China has been a bit of an anomaly and behaved differently than the rest of the world in the sense of policy. And so I still think there's a chance it could be a contrarian play for this year, but my conviction level is admittedly low.
Okay. Lesley, we only have about 40 seconds to the end of this interview. What signs are you watching for now that might indicate that the worst is behind us?
Mm-hmm. Well, there's three things that I focus on. One is GDP growth and the implications that has for earnings. We've talked about the fact that there's probably a downside coming in earnings expectations globally. The second is, are the central bankers close to being done? I think we have a clear indication that that's not the case. So a little more to run there, but there is a very aggressive tightening priced into the market. So in that sense, what the market is expecting, we're close to being done. And the third is sentiment. And I don't think we're at the point of a bottoming in negative sentiment.
Welcome back to Strictly Money. New banking rules have come into effect to create stronger consumer protections. There were about 60 changes made to Canada's Bank Act, which includes things like shorter wait times for resolving complaints and requires banks to meet higher standards in their sales practices. To discuss this and what you as a bank customer need to know is Jean-Paul Bureau. He is Executive Director at Fair Canada. Jean-Paul, great to have you back.
Thank you for having me, Saijal.
The last time you came on, we actually discussed this. This was coming, and as of June 30th, these changes have taken effect. I know there's a laundry list of them, but let's go through some of the key ones. And we have a board. I guess the first one is that banks now have to deal with customer complaints within 56 days. And if I'm correct, this is the first time that they've actually, required by law, have to deal with it within a specific time. What's your thoughts on this and the process?
Well, I think it's a very important development. And as you said, this is the first time they're going to be required by law to meet that 56-day timeline. Currently, or before these changes were introduced, they had up to 90 days, but it was only guidance. But the reality was most of the banks took more than 90 days, and at least 3 out of the 6 big banks took about 135 days on average to resolve complaints with their customers. So this is actually a very significant change and should really help to speed up the process. And as I said, the banks are going to have to meet this new deadline now.
And Jean-Paul, just remind me, who actually resolves this? So if someone complains, where does it go?
So it's basically a 2-step process. The first step is to bring your complaint to the bank. So whoever you're dealing with at the branch, you can call their contact center. It's pretty well anyone at the bank that you're dealing with. And the bank then has 56 days to try to resolve your complaint. And they have their own internal processes for doing so. At the end of that 56 days, if you're still not satisfied, you then can bring your complaint to an external ombuds service. And currently on the banking side, there are two different ombuds services. One is called ADR Chambers Banking Ombuds Services, and the other one is called the Ombudsman for Banking Services and Investments. And at this point, the banks get to choose where you bring your complaint if they can't resolve it.
Okay. The second one, banks must limit liability on lost or stolen credit cards to $50 and also warn customers if they go overdraft.
Right.
So explain this one and what you think about it.
Well, I actually think it's a great, very practical thing. In terms of the $50 liability for fraudulent charges, let's say on your credit card, it's a minor change, but an important change. So before these rules came into force, you would have to pay the lesser of either the $50 or whatever amount was set out in your credit card agreement. But there was one important exemption from that, and that is where your credit card was used at an automated teller with your PIN number. And in that situation, you would have been liable for the full amount that could have been put on your card. So this is an important development and should limit liability for customers, at least for some, going forward to $50.
Okay.
The thing that I find equally interesting, because I think we've all been affected by it, where we lose track of the money that's coming into our accounts and going out of our accounts, and then all of a sudden you get a nasty penalty charge for either having insufficient funds, or you're somewhere trying to make a purchase and it won't go through because you've lost track. So I think getting this alert is going to be really helpful for a lot of Canadians and a welcome development. Oh. And the great thing about the alert, it's automatic. As long as you provide the bank with your email address or a phone number, they can send a text message. You'll get these alerts, and you can set the amounts where you want to get the, if it's $100, a couple of $100 in your account, then you can let the bank know and they'll send you these alerts automatically. So I think it'll save a lot of people some frustration and some agony from paying these fees that they otherwise would have had to pay.
Yeah, and I think that's an important point because a lot of people forget, and they don't keep track, and then they go into overdraft. So we want these sort of reminders, certainly. We're going to take a quick break, and when we come back, we'll continue this conversation and talk about some of the other changes. Welcome back. And JP, we've been talking about some of the changes to the bank rules that protect customers. The biggest that I think, and I think you'd agree, is how they offer products and services to customers, right? The appropriateness of them. And so my understanding is there's going to have to be agreements for each product. They're looking at how they compensate employees, and even in reinforcing a blowing program. So talk to us about this.
Yeah, I agree. I think these are probably the biggest, the most important changes being introduced by the new rules. And so there's different elements to it, but one of the first and important element is the banks are going to have to find ways to compensate their employees, to incentivize them to make sure they're selling products to you that are appropriate for you and your financial needs. So I think you're going to see some changes. For example, rather than being compensated if you're a bank employee for how many credit cards you sell to new Canadians, there's going to be an expectation that your compensation is based on making sure that you're selling appropriate products to those Canadians. And to back that up, they've also introduced new requirements about that help the banks and help their employees figure out what is appropriate. And some of this includes they're going to have to know their client and understand their client's financial needs. They're also going to have to understand the products that they're selling to the clients so they can match the best product with the financial needs of each client. And I think that's a very important development.
Well, so this is really interesting because even just the upsell of products is interesting, because the onus now is really on the bank agent or advisor to show that they ask the appropriate questions. Do you think that the standard now has to go up, because a lot of these people didn't have necessarily fiduciary standards?
Yeah, so I think they are raising the bar in terms of the expectations from how the bank employees interact with the customers, but it still falls short of a fiduciary standard. So most bank employees are not fiduciaries and don't have a responsibility to act that way. But these new rules will help to kind of bridge the gap a little bit, and should lead to better results and better outcomes for Canadians using these banks to buy different products and for different services. Okay.
So these rules, I mean, when I was reading it, it said that it was 10 years in the making to get to this point. Do you think that enough was done. And how do you feel about the process? Because my understanding is they were looking for feedback.
Yes, and the pace of change is always frustratingly slow. But on the other hand, these are really important developments and they raise a lot of complicated issues. So on their surface, they seem relatively straightforward, but there are a number of implementation issues, and that unfortunately does take time. They also had to, and I think it was smart, they consulted widely. So not only did they have public consultations on these changes and wanted the input from different Canadians, but they also consulted privately with different organizations, including Fair Canada. And so I was very happy with the process and the ability for us to kind of share our views on how they could make the banking system better for the customers.
Anything you would have liked to have seen that was missed?
There's a couple of things on the complaint handling side in particular. So right now, the banks still get to choose which external complaint body they want to use if they can't resolve the complaint themselves. And this creates additional confusion. And the two organizations are quite different. One is a nonprofit. The other one is for profit. So that raises some serious issues in terms of the fairness of the process for the customers. The other thing that is not in these rules is the fact that the decisions made by these external ombud services are not binding on the banks.
Okay.
So the banks are still free to walk away from the process at any time. And this is obviously very concerning. And
Jean-Paul, I'll have to jump in because we're at the end of the show, but I appreciate your time. Thanks so much for coming on and explaining these changes.
Thank you very much for having us.
Jean-Paul Bureau of Fair Canada. Well, that wraps up this episode. Thanks for watching.